Hi and welcome to Khaleej Times. My name is Rube and you're listening to our IG-powered podcast series on financial planning. And today in this episode, we're going to be talking about, or rather, let me say, all about cryptocurrencies. What is it? How does it work? Which kind of cryptocurrencies are most investable in 2019 and in years to come? What kind of risks are associated with cryptocurrencies? How can you be smart about it? And a lot more. And to answer all these questions and of course share more information with us, I have with me Mr. Monte Safeiddine. He's a market analyst at IG. And just a gentle reminder again that IG is our sponsor for this podcast series. It's a platform where you can trade in over 16,000 financial products. Okay, first things first, thank you so much for being on the show with us, Monte, today. And let's start with a basic. So cryptocurrency is completely technology reliant. It's a very young technology. I mean, Bitcoin, if we see, it's just about 10 years old. So I think it is okay or fair to say that many of us are not completely aware about how cryptocurrency works, especially, and what is it really? So my first question, what is it really and how does it work?
Well, to understand cryptocurrencies, you kind of got to start with the technology that powers it, which is the blockchain technology. And to understand blockchain technology while keeping it real simple, you just have to think of it as like a ledger. Let's start with one ledger that says, okay, you have one Bitcoin. Okay. Never mind the type of currency, but just you have one of that unit of Bitcoin, for example. I've got two. Now, that's right now in the present. We know that of course, it gets updated over time. So let's take 10 minutes later, a new ledger gets printed out. This time around, I don't have two, I only have one. You have two because I gave you one or I sold you one, however it is the transfer occurred. But now you have two Bitcoins and I have one. So you had one block or one ledger, which said what you had and what I had. 10 minutes later, you have another ledger, an updated ledger. And every 10 minutes, in the case of Bitcoin, every 10 minutes roughly, you get a new block or a new ledger. And that's what you end up having, a chain of blocks or a blockchain. Now, that blockchain could be backed by something real in the physical world. So for example, it might not be Bitcoin. We could be talking about gold. We could be talking about something in the physical world. We could be talking about dollars, or we could be talking about a digital currency that isn't necessarily backed by anything like Bitcoin. So in the case of Bitcoin, it's a cryptocurrency. It's not backed by anything. In this case, it's just a number saying that you've got this much, I've got that much, and it's a ledger.
Like there's no physical collateral to it.
There is no physical collateral to it whatsoever. In the case of Bitcoin, there are other cryptocurrencies, for example, that are pegged to the dollar. There are other cryptocurrencies that are backed by gold. You have a ton of different cryptocurrencies that have come out, but as a general rule, when it comes to Bitcoin, which commands about 60% of the market share of the total crypto market share, Bitcoin's out there at 60%. So that's essentially how it works.
Okay. Yeah. And you're saying that, a new block is formed only when there's a transaction that takes place.
No, not necessarily. It's usually after a certain period of time. So in the case of Bitcoin, it's every 10 minutes.
Oh, really? Okay. Yeah, so even if the transaction doesn't happen?
Even if nothing has happened. So you end up with it roughly every 10 minutes. Okay. You do have different cryptocurrencies out there that have tried to minimize that time, because if you want to buy something and you need confirmation, you don't want to wait for it to happen. You want it to happen much more instantly, right? So that's one of the issues with a ledger-based technology that's powering your payments between two different parties. Okay. So that's in the case of Bitcoin, you're saying 10 minutes. Others have definitely minimized it to a whole lot less than that. Okay. So it really depends on the cryptocurrency, how it was designed. And that's why you have so many cryptocurrencies out there, designed in so many different ways, designed to service so many different things. Think of it kind of like the closest thing you can think of, both in terms of functionality, but also in terms of the price bubble that we've been seeing in the crypto market, is the dot-com bubble that we saw in the late 90s. You had all these different different websites on the internet. Yes. One was saying, oh, we're going to service this. Another saying, oh, we're going to service that. One was for retail. One was for certain type of service. And that's kind of how it was, and initially. So. Okay.
Now, since we're talking about blockchain technology, essentially you're explaining that how cryptocurrencies work. They're based on blockchain technology. I've come across, coin mining, that term as well a lot. Can you explain a little bit about
well, it's essentially because the thing about cryptocurrencies, and it depends on which cryptocurrency, but in the case of Bitcoin, in the case of Ethereum, in the case of certain cryptocurrencies, in order to produce more of them, they have a certain method which is using mining. Now they're trying to get rid of that. the more recent cryptocurrencies that have been emerging, they're trying to get rid of that format where to mine it, you got to have, basically you need to have big computers and go through a lot of computing, a lot of processing power in order to try and generate both to service the whole network while simultaneously to generate a certain amount of income for those miners. The thing is though, that amount because in the case of Bitcoin, for example, let's say the money supply increases by 6% per year. It's a lot less now, but it would grow by a certain amount. And then every year, every 2 years, it'll half. It'll offer less Bitcoin into the system. And this is essentially the difference between a cryptocurrency and with the traditional fiat currencies. Traditional fiat currencies, governments, because it's regulated by the central bank, if the economy isn't doing too well, for example, they'll have monetary easing or quantitative easing policies. That puts more money into the system. So they can print as much as they want. When it comes to cryptocurrencies, certain cryptocurrencies, you'll have to check which one, but a lot of times the gain in supply is limited. That does not mean, of course, by default, we always think that, if the supply is limited, doesn't that mean the price is going to surge because there's less of it out there compared to, say, the dollar? Not necessarily, because it's not just supply-based, it's also demand-based factors, like how much use is there? Is it feasible? And of course, there are other aspects like speculative forces and things like that to take into account when looking at the price of a cryptocurrency.
Okay, like you said, Monty, that it is not, government they don't have a stance on it. It is not regulated cryptocurrencies. Would you say that then, is it investable? Would you say that it's safe to trade or invest in cryptocurrencies?
Well, let's differentiate between trading versus investing.
Yeah.
When you say investing, you're thinking buy and hold.
Yeah.
And if that's the case, you actually have to own the underlying cryptocurrency. You have to actually own the Bitcoin. I'm not discouraging anyone from that, but of course there are risks involved in that. First off, there's the price risk. If the prices continue to fall, it's already falling a bit. If it continues to drop further, you're at risk in that sense. You might be at risk from a hacking point of view, and because it's not regulated, who are you going to complain to? Like if I have my money in a bank, if we have our money in the bank and something happens, we go to the bank and they try and reimburse us, even with a credit card as well. If something high risk, someone's used it or stolen it, we can go in and take care of it. With Bitcoin, with most of the cryptocurrencies out there, you can't complain to anyone because it's not regulated, because it's a decentralized system. Yes. It's not centralized in one area where you have a regulatory framework. It's all across the globe on multiple computers. Like I can serve. Exactly. I can be on the network as well if I want to. I can open up my computer to be on the network for certain cryptocurrencies. So it's decentralized in that regard. You can't really complain in that sense if you've lost a huge amount. You can try to recover it from the legal framework, but that's assuming that it covers things like Bitcoin and cryptocurrencies. And that's kind of the risk involved with actually holding the underlying. What about when it comes to actually trading? Now we've spoken about trading in previous podcasts. If you're trading the difference in price, which is a CFD or a contract for difference, what you're doing is you're just trading the difference in price. If the price, you can either buy or sell based on if you think the price is going to go up or down. You're not holding the underlying asset. So the risks involved, you're not holding any of the risks that you would normally have if you were to hold a Bitcoin. You're just trading it to the upside or the downside. In that case, yes, you're open to pricing risks. So if you buy and it drops, you're at risk from a pricing standpoint, or if you sell and it goes up, from that point of view, you're at risk, but you're not at risk when it comes to actually holding the asset. Like you would you actually buy the physical Bitcoin? Not physical, but it's a digital currency, but you get what I mean. If you actually went for the actual digital product.
So you're basically saying that, as far as the cryptocurrencies are concerned, it's less investable. You would say that it's better to trade in cryptocurrencies than actually investing in them.
Well, here's the thing. It depends on what you're after. Because I see a lot of people entering this field. A lot of people, and they're thinking to themselves, Bitcoin went from $1,000 in a very short period, $1,000 to back when it went up to $20,000.
It's crazy to see the amount can fluctuate
within
a matter of actually minutes, right?
Exactly. You can see these big plummets and big surges in a very, very short period of time, and that's forcing a lot of traders. The greed factor does enter, and people go, there are people that go, it's because it's the future or whatever, but there are also people that go, I want to make money off of that kind of move. So if you're after the trading point of view, whether it's up or down, that's one thing. But if you're saying, no, I actually want to invest in it, I think it's going to be the future in 20 years time, that's a whole nother story. And that involves a whole nother set of risks, especially because, how do you know if this one's going to be the future versus the thousands or millions of other big cryptos that are out there right now. It's kind of like, which kind of reminds me of the dot-com bubble when you had like a ton of different tech stocks and stuff, and only a few survive, but they're very, very strong. They're at the top now. You look at the main tech stocks and all that, and they're way up there. Even the internet ones like Amazon and Facebook and things like that. So which of these cryptos are going to survive? That's a whole nother story, but that is something to keep in mind.
But as far as the trading is concerned, so would you say that virtual currency or cryptocurrency is, or potentially can be, the future of money exchange? Like the trade, yes, it can be the future. You think so?
I don't think so. Not necessarily, but that's
Okay.
just myself. And I think a large part of it has to do with, you have to remember that these cryptocurrencies are
Yeah.
what you consider, they're decentralized, so they're kind of anti-establishment. And that's why it's no surprise when establishment forces, government forces will step in and say, okay, we need to crack down, or we need to regulate its growth. We saw that kind of when Facebook tried to introduce Libra. You saw automatically a backlash from a political standpoint.
Yeah.
That was not a surprise to me at all, because it's competing directly with what centralized monetary authorities are doing. And we see it now as well with China with regards to cracking down on Bitcoin and all that. They've embraced blockchain.
Yeah.
They've embraced the technology, which, by the way,
Yes.
can be used in other aspects
Areas
of
of-
society. It doesn't have to be
yeah.
used in finance. So
Yeah.
they've embraced blockchain, and they're trying to push forward on blockchain. They might even have their own digital currency and push that forward.
Yeah.
But why would they want to push forward a currency that they have no control and regulatory authority over? No, they'd rather stick with a digital currency that they create and that
Yeah.
they have control over, and that essentially loops back to them, so to speak. So I think from that point of view, I don't see cryptocurrencies necessarily gaining the steam that a lot of people said, oh, it's going to really go out there. It's possible. I'm not ruling anything out.
Okay.
Especially from a pricing point of view, a lot of the price moves have been speculative. And that's something people don't get. They think, oh, it's because it's the future. Maybe some of them, but a lot of it has been just a speculative price move where it's about, making money or forcing the other guy out. And it's a zero-sum game on that front. So that's something else to keep in mind when it comes to trading or investing into crypto.
I mean, of course, there are two schools of thought. Like one, that they consider cryptocurrencies, it's a Ponzi scheme, it's a complete fad, and it's a hype, so on and so forth. And then, the others think that no, there is a financial prospect there, and it is, implementable and so on and so forth. I want to just, for the sake of better understanding, Monte, can you share like a few examples with us? Like, for example, I personally don't know anyone who has, invested in cryptocurrency or even trades in cryptocurrency, but I'm sure that, do you have clients? You've got friends?
Yeah, of course. I used to. I work with IG now,
Yeah.
but I used to work for a crypto hedge fund before in the US. So I
Okay.
understand how it works from a crypto standpoint. I understand how certain investors are coming in with big money to try and invest and actually buy up, for example, Ethereum. They saw it as a promising cryptocurrency. That's not to say its price won't keep declining. I mean, it went up to. It was over, was it 1,500 at the time, and now it's plummeted all the way back down. Now it could head back down towards below 100. But you do have a lot of stories where people go, okay, I think Ripple, for example, is going to be the future. I'm going to go into Bitcoin. I'm going to put some people going, I'm going to put my savings into Bitcoin.
Yeah.
And they just see it as an alternative. Some of them are viewing it similar to gold, kind of, even though it's not tangible or physical.
Yeah.
And others look at it, from a future standpoint, and they target cryptocurrencies that offer more than what Bitcoin just offers. Bitcoin offers two main things similar to fiat currency, which is store of value, if you want to store your earnings or your savings, and a medium of exchange. So you can use it to exchange goods
Yeah.
and services between people.
Yeah.
But there are other cryptocurrencies that offer more than that. It's a store of value, medium of exchange, as well as, for example, smart contracts in the case of Ethereum. So I can see why there are people out there going, no, this crypto is going to be the future in terms of what it offers. It offers more than just a store of value, more than just a medium of exchange. I want to go into that. But yes, there are a lot of people going, this is speculative, I want to go for it, I want to make a ton of money, for example. And the bias in general, if you look at sentiment figures, the bias amongst the crypto community and smaller traders has been very, very, very heavy to the long side. So they're extreme long, 80, 90, almost 100, in the case of Ripple, like 98%. These are very extreme long levels, and usually that's prone to a squeeze. I mean, my fear is, and I always try to get it out there, is like, guys, watch it. You don't just buy it and hold on. So if you're looking to just trade it for the short term, because then you're prone to a squeeze. I would suggest ease off the extreme long levels that you're experiencing in cryptocurrencies.
Okay, so I just want to understand this. So when you say that long levels, what exactly do you mean?
Buy, majority
Okay,
buy.
all
So
right,
they're extreme
okay.
buy. Basically,
Okay.
like 98% of traders are buying, and only 2% are selling.
Selling, basically.
2 to 10%.
Oh,
Yeah,
okay.
which is you can see the bias is very heavy in favor on the buying side, which is a bit worrisome, of course, because when you have those kind of levels, it means you might be open to certain squeezes on the opposite end.
But if of all the people that you personally know of, and the clients, the friends that you have who have invested or traded in cryptocurrencies, you think, they have lost more money?
Here's the thing. I've seen stories where, obviously you've seen stories where they've lost because they've entered at like 20,000 or they went in at the upper.
With a big amount.
Well, yeah, and a lot of
Yeah.
times, first off, because they weren't, and we talked about this in the diversification aspect, they weren't
Yes.
diversifying. So they're going all in. I want to make a ton of money. This is my chance. I saw Lamborghinis with a license plate, Ethereum, Bitcoin. I want to be one of those guys who've got the Lambo or the Ferrari. And that's kind of the wrong mentality to go about it. Like what we talked about, our psychology of trading.
Absolutely.
It's the wrong way of doing it. Trading and investing, by the way. You don't just say, I'm going to go all in because I'm seeing people make money and I don't want to miss out. That is the worst possible way you can enter into any field, whether it's investing or trading. So the proper way to go about it is to go, okay, I'm going to diversify, put a really small amount if I want to go into crypto, and I'm not recommending it, but I'm not saying I'm not for or against, but I'm just saying that if you want to enter into it, you take a very, very small portion, you go, okay, which of these do I think is going to be the future in terms of application? Or if you want to look at it from a pricing standpoint, if you're trading it, you might look at it and say, okay, from a trading standpoint, where do I think price is going to go? Do I think it's going to go lower? I can short it and close it with the CF. I can sell the crypto, buy it back when it goes lower and book a profit. Or if I think it's going to go higher, I can buy it and sell it, buy low, sell high. So it really depends on the person. But in terms of stories or experiences I've had, I've seen both ways. I've seen guys who succeeded, and I've seen guys who've entered a bit late into the game, and with the greed factor, taking into account the greed factor.
Okay, so because like I said that cryptocurrencies it's very young, it's completely technology based, it's very young technology. I mean, of course, there's a plethora of information which is available on the internet, but because it is so technology reliant that it's a little difficult to understand. I mean, you can read about it, but unless you get down to transacting it, it's just difficult. It's very complex to understand, right? I just want to know that you may disagree with that, but I'm just saying from a layman perspective. But Monte, anybody who's interested, like a new investor or like a new trader, would you recommend a certain kind of investment model or trading model? Or would you say that, you can go on, you can read some white papers that are available on the internet just to have a better understanding of, say, various types of cryptocurrencies? And I also want to know that what kind of cryptocurrencies would you suggest to invest or trade in? I mean, what kind? Like,
well, I'm
going to diversification.
I'm going to start with what the expectations were prior to this recent move that we saw, where Bitcoin went up to about 14,000 and now it's coming back down.
Yeah.
Prior to that, the expectation within the crypto community was Bitcoin is just a store of value and a medium of exchange, whereas you have all these other cryptos that offer more, seemingly offer more. Forget application.
Like Ethereum is extremely powerful.
It offers for those smart contracts and stuff. So those ideally offer more than just Bitcoin. Although Bitcoin does have the application. It's more familiar, people use it in certain areas. So people are thinking, okay, Bitcoin might be better. But in terms of the power, the expectation was that there would be a decoupling in the price. Bitcoin's price would drop and the others would rise because they offer more. That was the mindset, the philosophy behind crypto back then. Now the exact opposite happened. It was Bitcoin, well, not exact opposite, but Bitcoin really led the gains recently. It gained more market share and the others a lot of them got squeezed and sort of.
And why do you think that happened?
I think that a large part of that has to do because the recent price moves were speculative. And what it means it's not based on what the future is going to be or application. It was really based on speculative. And the fact that on the exchanges, the crypto exchanges, not the traditional asset exchanges like for gold or for share prices, but in crypto exchanges, liquidity is very, very low. And what that means is when liquidity is very low, price moves can get very, very crazy because it doesn't take much to force price in one direction or another, especially to the upside, because people hold less liquidity on the upside. For risk reward reasons, they hold less liquidity above market price. So what happened was that I would look at and I would see the exchange and I'd see the liquidity behind the exchanges really light. It doesn't take much to just force price in one direction or another. You don't need a very, very big buyer. I mean, significant buyer, but not a major buyer to force prices, 20% higher. And you don't get that, by the way, with like traditional asset class. It's very difficult to move an FX pair, for example, 10%. It's just, you almost never see it. It's like a black swan event if it does occur, a very rare event. If the price of an FX pair, like if Euro USD were to plummet 10 or rise 10% in just a very short period of time, that's a very, very rare event.
Okay. But since we're talking about these, the surge and the plummeting of prices, what do you think really what really influences this major, price swings? It's extremely unpredictable if you see it.
Yeah, that's right. And when it comes to crypto, and this is the reason why trading is much more difficult. The reason why is because you have a lot more unexplained moves. You do get unexplained moves when it comes to commodities and FX and things. You do see it, but not on this scale and not this often. The size is nowhere near like this. This happens a whole lot less often because you don't know exactly how often people are going to be, when a big buyer could be entering the market or exiting the market. So this is the reason why I think that we've seen unexplained moves and we're going to continue to see unexplained moves when it comes to cryptocurrencies.
Okay, so again, I'm going to just come back to the question that if someone is interested, like a new investor wants to start trading or investing in cryptocurrency, what is the kind of model that you would, or what are the things that you would suggest to?
Well, first off, you want to, here are the few things that you want to take into account. First off, you're going to have to ignore the recent price move. Just take that out of the way. Don't look at it and go, oh, price went up. I think it's going to keep going up. I want to be a part of this. So let's go ahead and do this. I think you have to just take away the price point for a moment You have to factor in price when you want to enter and exit your trade. Obviously, you don't want to go in buying high or selling at a low price.
Okay.
But you want to extract that for a moment from the picture. If you want to look at it from a real investing point of view in terms of what the future might be, you have to consider how the crypto is based, whether or not the regulatory framework will allow for it in the future, or whether they're going to crack down on it, and whether or not it's going to be widely used and accepted. Because let's face it, when it comes to a cryptocurrency or any currency in general, its value is only the value that we attach to it. If we ignore a certain currency in the world, if we all say, I'm not going to use it anymore, the value is going to drop. No one needs it. It's just a piece of paper. Or if it's electronic, it's just a number on a balance sheet. That's really what the fiat currency is.
Yes.
But because we all decide to transact in, for example, here in Dubai, we decide to transact into dirhams. Yeah. So we are giving the dirhams that value to some extent. To an extent, it is pegged to the dollar, but I mean that we give it value because we want to exchange in dirhams and we want to buy and sell in dirhams. So it's about how we tend to use it. And the question is, in the future, this crypto you're selecting, if it's unknown or whatever, what are the chances that it's actually going to be used, its applications, and will the regulatory framework allow for it? If not, then you're better off selling it than buying it. I also think that in this framework, you have to, if you're looking at it from a trading standpoint, you have to take out the whole buy and hold mentality, because these are speculative forces at play especially when it comes to cryptocurrencies. Okay. There are speculative forces at play in traditional asset classes as well, big time. There are speculators in there as well, but here it's amplified. And there's no regulators to step in and say, okay, there's pump and dump schemes going on or whatever in crypto. There's no one to do that because it's not regulated. Yeah. So it's the wild, wild west, and they can keep playing that game for as long as they want. So I would take that into account prior to entering into the crypto sphere.
Okay, you said, pump and dump. I mean, I remember that I was reading this article about cryptocurrency, and there's a lot of information, like I said, is available on the internet, and you have so-called gurus who will tell you to invest in a certain kind of cryptocurrency, a certain coin, and everything. And I think one needs to be extremely, extremely cautious, right?
Absolutely.
So you're saying that if a new investor or a trader, I'm again saying both, they want to start out. Do you recommend starting out on their own? Again, because it's a very complex world, and it's very different from how a regular stock exchange, where you invest in stocks and shares and so and even like, for example, bonds and mutual funds and gold, something more tangible. Yeah. But here it's because it's completely online. It's an online, asset class and so on and so forth. Would you say it's better to reach out to someone? I mean, like an expert?
I would not. I think that when it comes to if you're investing, if you're trading, it's pretty straightforward. Yeah. You look at levels and you want to say, how do I trade this move, and where do the traders large and small stand in that regard. So with trading, let's not forget, you can sell it. So if you think the price is going to drop, you can actually sell and try to make a profit as it's dropping. So if the whole crypto market goes, if it's another crypto winter, as we called it, where the prices are coming down, you can engage in that and profit off of that. The question is, though, when it comes to investing, to go out there and all that, I mean, at the end of the day, everyone's going to be promoting and marketing their own crypto, and it's just really it complicates things, and it's going to be hard to see past all of that. But a good way to think about crypto, it's kind of like when you had the .com boom that was happening in the late 90s, there was a bust as well. But when you had that boom, you had all these different internet stocks, right? And only 4 or 5 emerged. Yeah. So you're looking at a bunch of, consider them all penny stocks, where a lot of them are probably going to go to zero. I hate to be the one to say it. I know I'm not anti-crypto, by the way. I'm not saying that there's no potential behind it.
Would you ever invest in a cryptocurrency?
I'd be super, super cautious before doing it. Trading is one thing. I'm talking about actually investing. I'd be super cautious. In the current environment, I would, because the bias is so much to the long side. A lot of speculators at play. So it's just too many unexplained moves, and I think that would make it difficult. But when you look at penny stocks, the assumption is that, look, most of these are probably going to go to zero. Most of these cryptocurrencies, I mean, all of them aren't going to be applied. It's impossible. If you've got thousands of them, it's not going to be applied. No one's going to be using thousands of different cryptos.
Absolutely.
I'm talking on a massive level. Yeah. On a massive level, you're going to have a handful, and that's about it. Yeah. So most of these that you're looking at are going to go to zero. But a handful of them, they could make it real big if there is the regulatory framework that where countries and governments allow for them to buy to be able to transact in the crypto. Otherwise, if there's a crackdown generally across the world, then it's actually going to go in reverse. It could go in reverse for a lot of these cryptocurrencies. So I hate to be the pessimistic one.
Right, what's going to work?
Exactly, and that's something to keep in mind, because people think to themselves, oh, it's as if I'm going to go buy shares of Apple or Microsoft. No, you're not. those are established companies with an established base, with a different, proper cash flow balances and all that kind of stuff within a regulated environment on regulated exchanges. So you're looking at two very, 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 very different cases. It's not the same at all. So you really have to think of these as penny stocks where the majority are going to go to zero, in my opinion, my humble opinion. I think that's the case. And that's something to keep in mind before you want to go investing in these. I say investing because with trading, it's pretty straightforward. You either know you're going to buy or you're going to sell it and you're going to profit in the short term. Investing, you're holding on to it. So if the majority of them are going down to zero, you're holding on to something that on average could probably go to zero.
Which is amazing because, of course, like I said, there are two groups. Like one who really think that it's very promising to invest in a cryptocurrency, and I think a lot of it has got to do with back in 2017 when Bitcoin, suddenly it soared and the prices topped about $20,000.
Yeah, but at the time it also pushed a lot of people to say, okay, what's this technology powering it? Blockchain, and people started to apply blockchain. Even China, the fact that China's embracing it means there is a future for blockchain.
Yes.
As for crypto, any specific crypto, there might be a huge future for cryptocurrencies in general, but a specific crypto, now you're picking and choosing a specific one. It's kind of like me saying, it's like me saying hundreds of years ago, before fiat currency came about, to say, fiat currency is going to be the future. It is the future now. We all use it. We all use fiat currency. But which one?
Yeah.
You can't just say, I'm going to pick one of them and hold on to it and hold on for, as we call it, hold on for dear life, HODL. You don't want to do that. That's not something you want to recommend within the crypto sphere. And that's the issue. So the blockchain technology is there. It has a lot of uses within crypto and outside of crypto currencies. But just keep in mind that when it comes to cryptocurrencies per se, if you're going to buy and hold, chances are the probability, if you look at it overall, the probability of you holding on to something going down to zero or very close to it is much higher. So that's something to keep in mind.
One last question I want to ask you. Are there any real world transactions happening with cryptocurrency?
Oh, absolutely. There are.
Okay.
I don't have exact figures. I'm not going to come in and say, it's this percent or that percent.
Okay.
But I guess the real question is it going to pick up? Or is there going to be a crackdown on it and prevent it from being? It'll still be used in certain areas, certain circles. There will always be certain circles that will transact in it. Again, as long as you accept in Bitcoin and I accept in Bitcoin, we can engage and we can transact in Bitcoin. But when it comes to the main items so far, for the most part,
buying physical goods and services.
For the most part, there's still outlets that will accept in Bitcoin. Okay. It really depends on whether or not the shops, certain retailers, or even car manufacturers. It really depends on whether or not they'll accept in Bitcoin. If they accept in Bitcoin, like even tourism, certain countries, if they accept in Bitcoin, you will see that circle of that crypto community go there and use it because of the fact that they can transact in it. So it's a question of whether or not these circles are going to grow, or are they going to shrink, or are they going to stay the same. If they continue to grow, then obviously the demand for that currency, crypto or otherwise, is going to grow. And if they don't, then by default, ideally the value should be dropping. Unless, of course, again, there's a speculative move, which is a whole nother story. But as a general rule, it depends on these circles. If people are going to start transacting in it and are going to start using it and prefer to use it, then yes, we can see that application expanding, which kind of is how it works with fiat currency as well.
Okay, so one major takeaway from this discussion is, if you're interested in cryptocurrency, of course, you have to reassess, you have to breathe. In case if you're interested in investing, you need to do your research, you need to study the market, and you need to take, in consideration a lot of factors. But of course, trading is a lot safer in the current scenario when you know that the prices are plummeting.
Long story short, you are going to be entering. This is the wild, wild west in terms of financial assets. It is the riskiest of all, you could say, in many aspects. So just keep that in mind. You have to be mature and aware that when it's that risky, the probability of gains might be higher, but the probability of loss or losing everything is higher as well when it comes to buying, especially buying and holding in the current atmosphere.
Perfect. Thank you so much, Monte. But I'm going to leave the audiences with a fun fact. So I was just reading again, and the first real world transaction that happened with the Bitcoin was, I think it was back in 2010, because 2009 when the Bitcoin was invented, to 2010 the first real world transaction happened when a programmer actually bought 2 pizzas for 10,000 Bitcoins. And today, just imagine, 10,000 Bitcoins, the valuation would run into like a 38 million or something, which is a lot to pay when it comes to satisfying hunger pangs.
I think it's wow. Moral of the story is you're saying you should become a pizzeria and transact.
I would say it's a lot of money to satisfy your hunger pangs. Okay, and be careful when you invest in a cryptocurrency. Thank you so much, Monte, for discussing all the insights on cryptocurrency. I hope you enjoyed the show as much as I did and you gained a lot from it. Do not forget to log on to khaleejtime.com, where we have lined up a series of 10 episodes on probably everything that's related to financial planning. And also a gentle reminder that this podcast series is powered by IG, which is an exceptional platform because it allows you to trade in over 16,000 financial markets. Also, keep tuning into KhaleejTimes.com for more news and updates. So do not forget to tune into our next podcast, which will be, again, on a very relevant topic related to financial planning. It's a wrap again. Thank you so much for watching. Take care.